Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Friday, January 23rd, and my name is Raleigh White, and I'm coming to you live from an overcast, rainy day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a focus on the A-line swing trading strategy. So today he's going to begin by giving us a midday market analysis, and he's going to share what his top watch list stocks are here for the afternoon. Then he's going to give us an introduction into the A line and how we find A lines in the market. He's going to talk about why the A line is perfect for beginners, but is also extremely appropriate for pro traders as well. He's going to share how to find a smooth trend, which is extremely important to this strategy, and how to avoid those false breakouts. And then how do you confirm a good A line? And what's the best option to pair with that alert when you see it? And lastly, he's going to share why it's really important for everything just to line up perfectly for this strategy to work. This is going to be a terrific session for you all. Now, if you've got any questions during Roger's presentation, please type them in the chat panel, and we will address them periodically throughout the session so as to not interfere with his presentation. And also remember, folks, that I've opened the chat to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Number two, keep to the topic. Number three, no political discussions allowed here whatsoever. And also keep your side conversations, but just between one or two individuals to a bare minimum. It interferes with the rest of us are trying to do because we're here to listen and learn from the education that Roger's going to be sharing, because after all, he's here to give us an edge in the market and to help us become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning, for Roger's 8 o'clock pre-market briefing, which, by the way, if you're not attending that, you should be. We'll talk about how you can do that every day. But this morning, he identified several catalysts that we needed to be aware of. In the chip sector, we noted that Intel was down 13% coming into the open, which was only slightly offset by the fact that NVIDIA was up 1%. On the consumer front, we noted that Procter & Gamble was coming into the open at a 1%. In the healthcare area, ISRG was up 3%. On the tech area, Applied Materials was up 1%. And in the industrial sector, we noted that NUE and STLD all were going to be releasing their earnings before the market opened. On the Fed front, we noted that we had a PMI flash report that was scheduled, as well as consumer sentiment. Now, for those of you that wonder, why do we even talk about these catalysts? Well, from Roger's perspective, if there's information that is either known or will become known, but is not yet priced into the market, well, that makes these volatility flashpoints. And that's important because let's say, for example, you're considering investing in a stock in the chip sector or consumer or healthcare or tech or whatnot. It's probably good to know what's going on in that sector and what the trends are. Now, as it relates to Roger's large stock pre-market watch list, you'll note that he had 6 shorts today and 13 longs. So he gave us 19 tickers to consider. And the thing I want to say about this is that these are stocks that are on Roger's watch list. That doesn't mean these are automatically tickers that he's going to trade, but they're setting up to be potential trades that he might want to take. And as he goes through each one of these tickers every morning, he shares a little bit about what he's looking for in order for those stocks to set up the way he wants them to. Now, we're at the midday, and Roger's going to give us an update as to which stocks remain on his watch list, for this afternoon. And so the point that I want to make is this. These are legitimate stocks that Roger has his eyes on. And if any of these really become, ready for prime time, more than likely that'll be a stock that he places, and he'll share that in his trading pit and his other premium alert services. Now, as far as his pre-market thoughts were concerned, we noted that the futures were down mildly coming into the open. Okay. He shared with us that the put to call ratio was slightly bullish at this point in time, and that the VIX was also falling off lower in its range below 16. You know that 20 is that level where we get concerned when the VIX bounces above them, but the VIX or the fear factor was dropping a bit lower. Also, stocks that were above the 20-day moving average were continuing to rise, and those below 20 were slowing. And once again, this tells us that the markets are mildly bullish at this point in time and not particularly overextended. We did see that the QQQ and the SPY also were consolidating, moving sideways right at the 8-day EMA. And from Roger's standpoint, really not showing any signs today of accumulation. They just seem to be resting at that point. And from his perspective, when he sees a stock consolidating at the 8-day EMA, he says there's no real bias in the market to move that at this point in time. And that carries over to the fact that he does feel that the markets are a little bit too biased to the upside, okay? A little bit too toppy, and that has the potential to make for choppy trading conditions. So his recommendation, folks, be cautious. It's Friday, and Friday, in particularly in the afternoon when things slow down, it can be very, very tricky to generate any decent trades. He also said, for those of you that are looking at or considering looking at chip stocks, to be careful because that sector basically was rocked today when Intel dropped about 13% in the pre-market. So, as far as Roger's agenda today is concerned, we have a lot of great people coming into the room, and we certainly appreciate that. We love it when you guys are here. And in response to that, Roger always likes to share a lot of great information. And today, his focus is going to be on the A-line swing trading strategy. So he's going to begin by sharing with us what his midday market analysis is and what the top watch list stocks are for him as we head into the afternoon here. He's also going to give us an introduction to the A line and how we can find A lines in the market. He's going to tell us why the A line is perfect if you're a beginner, but how it also makes really good sense if you're a pro seasoned trader. He's also going to share with us how to find smooth trends in the markets and to avoid false breakouts and how all that comes together, confirming a good A line. And critically here, what's the best option to pair with an A line? And then he's going to conclude by saying, guys, here's why it's important for everything to line up perfectly for this strategy to work. This is going to be a great session. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember, the chat is open to everyone, and we do have some ground rules. Number one, be kind and supportive in your post. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. And also, keep your side conversations between just a handful of people to yourselves. I mean, seriously, the rest of us are here to listen and to learn from Rogers what he's going to be sharing because he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to Matt. Uh-oh, Matt's got his hat on backwards. Must mean action, action, action Jackson.
Yeah, that's Matt today, Action Jackson. Matt, tell us what you've been doing today.
Oh, I think his microphone is off.
Your mic is off, Matt.
We have been trading, which we didn't really anticipate, but the market's been setting up for us. We already have one winner. We're working on a second one right now.
Excellent.
And but in the in-between time, I'm still going through in our deep dive on the SPY trades or the Trading Zone Live trades and really getting into the nitty-gritty on each of them so we can have some really good metrics moving forward.
Yeah, this guy's Matt is going back, folks. He's going back and he's tagging each one of the 400 trades that we've done in the pit for every type of trades. He's figuring out.
Not the pit.
I'm sorry, excuse me. Trading Zone Live. I'm too many services.
I want you to get emails about it.
Yeah. Trading Zone Live. Sorry. Yeah. And what Matt is doing is, and folks, this applies to whatever program you're in. I'm just letting you know what we're doing. So a long time ago, I told you guys that one of the most important things you could be doing is journaling your trades. Journaling your trades is really, really, really important. Okay. Like really, really important. Okay. And one of the things what we're doing is we're we're taking every trade, going back to every trade and timestamp trade, and putting it into the journal. And the journal is it's very advanced. The journal's like works off of the real time data. It's got AI and all that stuff. So what the journal does is it tells us, hey, you shouldn't trade on Monday before 12 o'clock. I'm making all this up just to illustrate a point. And this is actually true. The journal told us that certain days of the week are better than others. The journal's telling us that if you trade Tuesday through or Wednesday and Thursdays, you do really, really well versus other days. So the journal tells us all that. So what we're doing right now is, because we already have over 400 trades, it's a good amount of trades. Matt is taking right now his time and he's inputting every trade into the journal and really going through the information. And this is helping us making each program better. It's much easier with swing trades than day trades, but I'm sorry, it's much easier with day trades than swing trades because we have a lot of different numbers. So there's a lot more data. Now, one of the things I do want you to understand is this: when you start journaling trades, you shouldn't be looking at trades. Okay, the biggest mistake traders make, and this is the biggest mistake you will ever make in trading, is looking at your last trade. Okay, looking at your last trade. Okay, don't look at your last trade. Look at where you are right now. A lot of folks are trading and looking in the rearview mirror. Don't do that. That'll mess you up. Also, don't look forward. Stay grounded in your trades. And the journal helps you do that. But what I wanted to say was this, that until you start getting 50, 100, 120 trades, your information is going to be more than random. So you're not going to be able to get as much out of it as you may be hoping to get. Okay, is what I'm trying to say. So be really, really cautious. Okay, be really, really cautious, and don't take your random data that you have in your journal and turn it into gospel. Okay, that's why with swing trades, I like to look at the journal once a year. Okay, once a year, we make these changes very, 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 very slowly. But with day trades, you get so much. You get so many data points. Exactly, Ken. What Ken just said. You need a large number of data points to not be random. And folks, this is a post PhD in math from MIT speaking. He knows his numbers. You should listen to what Ken says when it comes to math. He really knows his numbers. So yeah, you need to have a sample of data. You can't go looking at 10 trades, your last 10 trades. Oh, I'm an awful trader. I lost money 8 out of 10. Don't do that. Don't do that. That's not how you're going to make money in the markets. Now, as far as trading journals, we've been using Trader Sync for a long time now, but we're also experimenting with Trade Viz. And Steve, this is recorded. Yes, this is recorded right now. It's being.
Yeah, I'll take care of that, Raj.
Yeah, you take care of all that. So we're also trading. We're using a program called Trade Viz. Trade Viz. Okay. Okay. I'm going to close the chat. It's just messing me up. I'm just going to close this chat. It's just
Please do. Yep.
It just messes with me. Okay. Thank you. Oh, my life will be easier. Yeah. You can ask me any question that's relevant. All right. So we're testing a program called Trade Viz, and the reason we're testing a program called Trade Viz is because Trade Viz seems to have a lot of what if studies. So what we're finding is for the day trades, Trading Sync seems to be pretty good, and we're finding for the swing trades that Trade Viz may be a little bit better, but the jury's still out, and I'll let you guys know about that. Again, our job is to compare and try all this stuff and see how it works, and then give you the conclusion. But I wanted you to know that for Trading Zone Live, we're literally going back and doing forensic accounting on every trade to see what we could be doing better, which is, what every trader should be doing. And you guys should be doing that too. Most of these journals are compatible with your brokerage platform, so they'll just download directly into your brokerage platform. Folks, I have never seen a long-term successful trader that does not journal his trades in my life. It has not happened yet.
Right.
Now, with that said, some people use Excel. I mean, you don't have to get fancy with this, but if you don't, if so, yeah, you got a journal. Now, pros and cons. I'm going to tell you this. Trade Viz seems to be more clunkier, has a lot of features, but they seem to be very clunky. So the jury's still out on Trade Viz. So as of right now, I'm going to recommend Trading Sync because I've known about it for years. I've used it for years. It works really well. Okay. Trading Sync,
Trader Sync.
Trader Sync. Thank you. Trader Sync. The jury's still out on Trade Viz because it's got a lot of features, but I want to make sure all those features work. Okay. So I kind of like what I'm seeing, but it's a little clunky and it's just, I'm not getting a kind of vibe from it that I'm getting from Trader Sync. So right now, I like Trader Sync. The jury's out on Trade Viz. Okay. Trader Sync is really, really solid. And again, the only reason why I'm trying this Trade Viz is because I want to see how these what if scenarios work. They're supposed to be really cool. Like, okay, what if I let my trade go here? What if I let? So I want to. Yeah, that's it, Ken. So I want to. How did my chat pop up? I just closed. So, so I want to be able to. So I want to be able to do that. So I will keep you guys posted in every step of the way. Okay, every step of the way. All right. And yeah, they sync with everybody.
Well, the thing is this, Roger, one of the things that I think is just awesome, and as great a trader as you and Matt are, we all recognize that sometimes there are patterns that we just don't see.
Right.
Where it's kind of, can you see the forest for the trees? And anytime that you can back off of that, and you're spending an awful lot of time forensically looking at all these trades, and I wouldn't be a bit surprised if there aren't some patterns that unfold that are going to share with you statistically opportunities, or more importantly, maybe times to stay away from things.
Exactly.
And
Exactly.
you guys are pros. You guys are pros.
Yeah, but again, I gotta, I want to make sure everybody understands kind of like what we're doing at all times, because there's a lot of stuff that goes on behind the scenes that you guys don't see. You're only here with me 2 hours a
We're
day, 1
constantly
hour.
looking at ways to improve.
Yeah, we're
Yeah.
always constantly at every given moment. We don't just sit here and go, oh, we're doing great. This is amazing. No, no, no. I'm always looking at, like right now, I'm trying to, I'm trying to see which broker is the best for the small caps. I'm trying to integrate TradingView with the small cap broker for the high flyers. I'm trying to improve the scanner on ProTrader dashboard. We just added the high volume candles on the ProTrader dashboard. So, so again, we're always looking ahead. We're never taking what we have at fair value or at face value or at like we're doing amazing well. No, things are changing. Things are always moving around. You have to evolve with the market. If you don't evolve with the market, folks, I evolved a lot in the last 30 years. I've evolved a lot in the last 10 years.
Mm-hmm.
Not a lot, but subtly. All right. So again, and as I mentioned to you all yesterday, I mentioned it yesterday, and I'm going to mention it again. If you have Think now does have it took them like 24 hours to make it. Now they have a pop-up, and you can click on the pop-up that says you could do that. If you don't see a pop-up in your account, just call your customer service agent and says, hey, don't restrict me from the small caps. By now, they all know. This became public yesterday. By now, all the customer agents know. It takes about 3 seconds. I got about 10 emails today. Yeah, Roger, I called them. They took the restriction out. It's all good now. So you shouldn't have any of those problems. And Bodine, I beat you guys before that video came out. So I was the first actual person to tell you this.
And honestly, who cares? They're allowing it to happen. This is not about who takes credit. The fact is that they made the change.
Exactly. That's the key. They made the change. So yeah, it's done. It's done. They made the change. Everybody who has Thinkorswim can rest easy now. Okay. So let's talk a little bit about the market. Let me share my screen. We have a really important class today. I'm gonna do the A-line class for you guys today, and I think you guys are going to absolutely love it, love it, love it, love it. Now, Sorry about that. Okay. So, first things first, let's look at the market. Let's look at the market. Let me bust out my goodies here. If you look at the market right now, you will see that we're actually outside of our range. We're using the upper end of our range as support, which is really a good sign. That goes with, remember what I told you? Break out, pull back, and come back up, that pattern. Okay. We're seeing that pattern right now. The support levels hit really well. They were used really, really well till we got out of the channel, obviously. But as you could see here, things held very, very well for us. We're now above the 8-day EMA. I like where we're at. I'm glad that I was wrong and we did not stay here for more than 2 days. We were here for 2 days. I thought we may stay here for 3 or 4 days, but the whole thing with Greenland got resolved much faster than anybody expected it to. You know, hot, cold, whatever. So that's done with, and now we have the support line that we're keying off. This support line happens to be right where the 8-day EMA is. So as long as we stay in this area for quite some time, we should be okay. We should be okay as long as we stay here. Now we do have a lot more news coming out, and fortunately, the news on Intel didn't really roil the market too bad. Didn't really do much to the market. As a matter of fact, if you look right now, Nasdaq was the strongest sector, and right now it's starting to get strong again, and chip stocks are starting to gain relative strength once again. Meanwhile, mags are losing it, and now I have this on my right side, and I'm constantly looking at this, and this is the Pro Trader dashboard, by the way. And you could see right away, I just look at this. That's all I'm really looking at. This and key levels, how close we are to key levels. But I want to see what's stronger, what's weaker right away. Where's money flowing into? And I have that right here. So right now we look like technology is actually holding on. We've been price action is just crap intraday for the last hour or so. This is just horrific price action. But overall, I like what I'm seeing. Remember, it's Friday and it's close to 12 o'clock. And usually afternoon on Friday, we tend to fizzle out. Okay. Something really, really important you guys need to understand. There's just not much, we don't get that much love from the market after afternoon on Fridays. Now, we could have some news and fundamental data, but I'm not really seeing it. As far as market internals, the Volt is going nuts right now to the upside, which again goes with my bullish thesis. But ADD is at negative 520. So you don't have a lot of rhythmic market action right now. This is, you got a market where the ball is bouncing maybe 5 feet, 6 feet, not 20 feet in the air. So you don't have a lot of, and we're not exactly breaking out of this upside here either, okay? As I mentioned to you yesterday, when we were down here, I said we usually gravitate towards fair value. We are right at fair value right now.
Right.
Momentum, the gas pedal, not that it's really active this morning, but you could see that the lows are getting higher and we're moving to the upside. And VIX is near the lows. And we're really consolidating near all-time highs. Or close, I mean, close to this level right here, yesterday's. And if we can bypass this level, if we can take out the 691 level, the odds are we're going to start flirting with these price levels over here. Okay? We are coming off oversold territory, so the odds are we're going to stay around here for a while and maybe curl up a little more. The point is I wouldn't be looking for shorts right now too aggressively. If I was looking at shorts, those shorts would have to have very, very high volume. All right. And that's pretty much as far as broad market action is concerned. As far as momentum, that's what I'm trying to give you guys a little update from this morning. As far as momentum levels, we're not at here. We're not at 300. This morning we were at 353. We're a lot more neutral now. We're at 233. What you're seeing is mega caps starting to move, which is influencing the market. You're not really seeing too much from the overall market. This is just choppiness. So there's just not much happening right now. This is not a time to take day trades. I mean, swing trades, you could look for some, but this is not a time to take day trades. This is just shit. Excuse my French. This is just garbage right here. Don't, do not trade in this. Do not trade in this market and fire. Unless you want to just, be chopped around left and right. You don't have any follow through right now. Okay. There's no follow through. Okay. So with that said, I want to talk about the A-line pattern today, and I want to explain to you what it is. I want to explain to you, and bank stocks are, by the way, very weak, which doesn't bode well for the overall market. Okay, so what I want to do is I want to talk to you guys about the A-line pattern. Now, the A-line pattern, and usually I do this class on the weekends because I really enjoy it a lot. I get a lot out of this class. I truly enjoyed this class. So I enjoy doing it on the weekend because weekend I feel like it's a holiday. When the markets are not moving, there's not a lot going on, but it is what it is. And I have a scanner here that I use for A-line longs and A-line shorts. There's not a lot of setups right now popping at all, as I just mentioned a while ago. Here's one on Coop. Here's one. Let's see, maybe there's a couple more popping up right now. But there was one that I was looking at. Let me show you. It was TSM. This right here. This is a really nice A-line right here. A very, very nice A-line. I'd like for this to go a little higher, but it already broke above this area right here. So this is technically an A-line right here. Now, before I explain and go into deep, deep details about what an A-line is, let me just check something here. Before I go deep, deep, deep into what an A-line is, and good morning and good afternoon, everybody on YouTube. I hope you guys are doing well. I always like to tell people that if my kids, which absolutely have no interest being part of the stock market game, although my daughter is opening up her account for long-term investment right now, but my kids are, if my kids were interested in the markets, okay, and they're not, but if my kids were interested in the markets, the A-line would be the first place I would start with them. If one of my friends comes to me and says, hey, I want to start, where do I start? I would say, look no further, A-line. Now, why the A-line? I'll explain to you why. Because the A-line takes 5 or 6 extremely important fundamental pieces of the market and puts them all together. So what it does is it makes it really simple for beginners to learn and at the same time earn, okay? It's not a complex pattern if you can understand it. But several things have to come together. Several things have to come together, okay? And that's why I like it, because if you can identify, because most of these pieces make up other parts of other programs. So if you can understand this and if you can learn to see the market this way, you really have a chance to learn how to trade on your own. So to give you a good analogy, okay, let's say you go to the gym. Have you guys ever, like, for those who've never trained before, or those who've only worked out a couple times in their life, you go to a big gym, right? And you're like, oh my God, what is this? What is that? And you see all these weird tools, right? The thing that does this, and then the hip flexors. And anybody who's ever worked out for a while, we don't touch those things. We go to like the meat and potatoes. You know, you do your bench press, you do your squats, you do the big things. But this is the same thing. This program is the big pieces. It doesn't have any of these wrinkles that will just mess you up or confuse you or cause you to go off the reservations. If you knew how many times I'd go to the gym and I'd see a person who should be doing bench press doing these things, you know, it makes no sense. So again, this gives you the structure. The A-line gives you the structure, okay? And the structure is really, really important, okay? So I'm going to go ahead and tell you all the parts that make the A-line, and then I'll try to find some good examples. If not, today it's very hard. The market's just crap, but I'll try to find some good examples for you. So the first thing we need to do is we need to find a clean looking chart. Okay? A clean looking chart. Look at this chart right here. Look at how often the ups and downs happen. Look at how well it respects the 8-day EMA. It's a very clean chart. So we're just going to look at some stocks and we're going to compare. Okay. That doesn't look too bad, but not as good as this, right? Now, what about this? Very gappy, right? Gaps everywhere. Gaps. So one of the things you don't want is you don't want gaps. Okay. What about this stock? Not as gappy, but a little choppy. Not as clean as this. What do I mean by clean? You see there's very little overlap. It moves like it's like a painting. It doesn't have a lot of this day to day. Here it does. Here it does, right here. See this? We want to avoid this. We want to have a runner like this, moving just very directionally. Okay. Let's see if I could find a few for you. Okay. Now, what about this stock? Compared this stock to all, I don't care about where it is right now. Just look at the quality of the trend. Okay. That's a really, really nice stock. See this right here? This is the kind of stock you want right here. Stock that's doing this. Back in the day, and when I say back in the day, I mean back in the day, right here, or maybe even, yeah, I think it was right here.
Wow, it's incredible.
Matt and I, see this right here? Do you remember, Matt?
Oh yeah.
See, he remembers. See this right here? That's the kind of move ideally you want to be part of. And let me explain to you why. Because if you're wrong, the trend will save your ass. It's the simplest way I could say it. See, let's say you get up right here, right? Look how many days it takes to get back up here. Okay? Versus a stock like this. Or a stock well, forget about that one. That's not even part of it. No, that's a clean one too. MR. That's a really good one right here. Look at that one right here. That's a clean trend right here. Again, forget about what it's doing right now. Just look at the move. Okay. So one of the things you always want to do is you want to have a chart that has the least amount of this, because if you pick a stock, look at Merck right here. Look at this trend right here. Very, very nice. Very, Matt, you're probably going to have to get out of Merck. Keep an eye on it.
Yep.
That's right here is a nice clean trend. You don't want to be in stocks that are doing this. You don't want to be in stocks that are doing this. Too much mess, too messy. They're not clean. Okay. Now, you're probably thinking to yourself, well, that's great, Roger, but what about all this cool stuff you're going to teach us? Well, let me start off by telling you that whatever I'm going to teach you from this point on is maybe 5% as important as what I'm teaching you right now. This is how you go from 60% accuracy to 80% accuracy on your swing trades, not by using fancy technical indicators. I know. You all want an easy answer. Not going to give it to you. There isn't one. You got to learn to read price action. Okay? So if you want your swing trades to go from 60% to 80%, start looking at how you got to where you are. Remember, I always tell you, it's not where you are, it's how you get there. So look at the quality of the trend. Does it bounce off the 8-day EMA and come back up? Google, for example. Google tends to bounce off the 15-day all the time. It bounces off the 15, for example. It doesn't bounce off the 8. It's not as clean. But some stocks like Halliburton, look at this run right here that it had. Very, very clean. Very, very, very clean. So it's really, really, really important. Really, really, really important. Back. Make sure we're on. I need to go back to present time. Where is this? Oh, here it is. Okay. Look at Halliburton. Look how clean this trend is. That's a nice, clean trend. AGI, a little messier. So look, you get in here, right? Let's say you get in right here. You got to go all the way through this to get back above this. Let's say you get in here. You got to get through all of this to get up here, right? Now look at Albemarle. You get up here, no weight. You get up here, hardly any weight. That's what I'm saying. You have to cheat in order to win. You have to cheat by doing visual back testing. You have to cheat. No one says you can't cheat. Okay. Well, Roger, what makes me think that what makes you think the stock is going to continue doing the same thing it's doing before? This is how it works. They just do. I don't know. Each stock has its own fingerprint. Okay. The odds are this stock is going to continue trading this way. And if it doesn't, it doesn't. But why step in shit if you don't have to? Right? Why step into a bad stock if you don't have to?
So, Roger, several people are wondering, how long does that trend need to be going on for?
The longer the better.
As you said, at this point in time, because many people will wonder, gosh, Roger, it looks like it's a bit, overbought now. I'm expecting a reversal. And your point is, hey, it's going up. It's a nice little slope. Why would it turn around?
Well, we're talking about two different things right now. Okay. Whether a stock is overextended and whether it's moving up nicely are completely two different things. Okay. So let's go back to my Albemarle example. Okay. What I'm talking about is the quality of the trend.
Right.
The quality of the trend. Now, the stock is overextended right now, but it has nothing to do with the quality of the trend. So the fact the stock is overextended now means you shouldn't be buying it right now. But it doesn't mean that this is a stock you shouldn't be targeting. You should be targeting stocks that look like this, is what I'm saying. Yes, it's overbought till it comes right back here again, right here. It is. I agree. I'll give you that. And I'm not telling you to buy it. I'm telling you, you should be looking at stocks that look like this. Okay? I'm not telling you when. We're not talking about when to buy it yet. We're nowhere near there yet. We're not even in that stratosphere yet. What I'm telling you is, if you want to improve your game, start looking at stocks that have a quality of a trend like this. When you engage is a conclusion. Look for stocks that look like this is what I'm telling you. Okay. So let's see, AGI. Not as good, not as clean. Look, gappy, moves back 3-4 days. It doesn't look bad. I wouldn't throw this out of my, but it's not as good as, say, this stock.
Mm-hmm.
Now, does that mean I'm going to buy it right now? I didn't say that. I'm not even close to being there. Okay. I'm talking about the type of stocks you should be looking at. Stop trying to time the market with your entry and exit signals and start looking at context. I'm going to tell you a funny story, okay? A funny story. I was dating a girl one time, okay? And I think we went on 5 dates, and I was starting to like her. And I heard her talking on the phone with her parents, or no, her grandmother. This was, over 30 years ago. And I heard her talking on the phone with her grandmother. And she wasn't being nice to her grandma. And I said to myself, a person, she was being very nice to me, but she wasn't being, and I said, you know what? If that's how she behaves to her, if that's how she speaks to her grandmother, I can only imagine how she's going to speak to me in a couple of years. And that was the biggest turnoff. So do you understand? I was looking at the big picture. Start looking at the big picture. Stop looking at what's in front of your face like this. Start looking at the big picture. Because you know why? Because whenever you get into a stock, the stock is going to trade based on its characteristics. Mm-hmm. And the characteristics of a stock are the most important things that you have that you can gain an advantage on. So that's why I'm trying to teach it to you. The
Yeah,
entries,
and our tendency is we're trying to jump to the conclusion, and the point is not yet.
we're nowhere near there yet. Okay. So we want a stock that has, so the first thing is we want a nice clean trend like this. Look at that trend. Look how smooth this is. You get in here, oh, your timing is wrong. What happens? You make money. You get in here, your timing is wrong. What happens? You make money. You get in here, what happens? You make money 3 days later. That's the kind of trend you want. You want something to save your ass if you're wrong. Stop thinking of best case scenario and start thinking worst case scenario. Okay. I know for some of you, this is very unnatural and this isn't like the way you want, what you want to hear or how you want to be taught, but I'm being real with you. I'm telling you how it is. I'm not trying to sugarcoat anything. Oh, God. All right. Oh, this market. I mean, just chop fest. Okay. So this is the kind of trend you want. So the first thing you want to do when you're looking at a stock is you want to look at the quality of a trend. You want to look at the characteristics of the stock, because ultimately you're going to have to live with this stock. And when you live with a stock, you want to have as much. You don't want to have any surprises in the middle of the night, right? You don't want your wife waking up next to you in the middle of the night and saying, you know, I forgot to tell you, but I have 3 other kids by 2 other husbands, right? That's what I'm trying to eliminate here. Okay. So you want a nice quality chart so you don't get any surprises in the middle of the night. You understand? Okay.
Makes
Now
good
that you've
sense.
yes, you want to meet her family, you want to meet her friends, you want to get to know her. This is what we're talking about right now. Okay. Once you've got to know her and once you feel warm and fuzzy that you know this thing isn't going to gap down 3 points overnight, it's not going to pull one of these here,
Crazy Ivans.
yeah, what was it? Oh, well, not Roblox. This is actually, oops, this is actually a really good one. Like, look how clean this moves. Look how clean this stock moves. It tells a story instantly versus a stock like here, like this. Like, what the hell is this thing doing? Like, do you know if it wants to go up, if it wants to ask yourself randomly, if I get in here, am I going to be right if I'm wrong? If I get in here, am I going to be right if I'm wrong? Do that with the stock and see how often does this thing like the 15-day EMA? I don't even know. I can't even figure it out by looking at this thing. And I've been looking at stocks all my life, literally all my life. I can't figure out what this thing is going to do. Look at this. It's everywhere. It's everywhere and nowhere. It's like American Express. Okay. Anyway, I think you guys get this part of the equation. So let's go back. So the first thing we want is we want a nice, clean trend. Nice bouncing off the 15 or the 8-day, respecting the averages, where you know that algos have been buying this thing every time it comes down to the 15-day. Okay. So you have a clean stock. You have a list, you have a couple of clean stocks. Now, folks, that's going to be much harder for you to, because you're so used to all these stupid indicators, it's going to be harder for you to figure this out. But you need to figure that out. So the next thing we want is a pullback. We want a pullback. Okay. Now, for your purposes here, you can use an indicator that I have. It's called the quantum indicator if you want to. It's an amazing indicator for short-term pullbacks. Okay. It's an amazing indicator for short-term pullbacks. But if you're cheap, as a matter of fact, when you buy the quantum indicator, I give you a back test of how it performed on the SPY. But if you're cheap, you can just go here and go to the RSI. And you can go to a 2-day RSI. Hold on a second. Modify this. Okay. Again, I like to use my quantum indicator. So what you want is here. Let me go to Albemarle. Let me put this back on here. Okay. See this? See how far away it's from the averages? See, it's overextended right here, overbought. You want to buy them when they're doing this, coming back up on a V, or when it's near this area right here. Okay? So you want to buy them when you have a strong trend, a swing high, then you want it to come back and you want to buy it either as it's coming back and touching this and on a intraday basis starting to resist and come back up. Remember I showed you how to deal with levels? Hold on one second. Okay. Of how it hits levels. So you're looking for a nice stock, a clean trend. Then you're looking for a trend to break out and you wait for a pullback and you can time it either. You could time it with this right here with an 8-day or a clean trend. You have to have good eyesight for that. Or you could time it with this right here, not as it's going down, as it's coming up on a V above this level. Okay. And then what happens is it turns around and it starts looking like this. So let me put it up here. TSM. Okay. All right. Okay. See how it broke down and now it's starting to come back up? When it breaks above this level, you buy. So you have a trend, you have it moving higher, you have them make a swing high, you have it come back a little bit to the averages, not here, to the averages, which is right here. There's your trend right there. There's this pullback, and it comes around, and as soon as it comes around back up here, you could start buying this. Unfortunately, right now, the market looks like crap, and there's just not that many great examples. Matt, you're not long, are you?
Nope. No.
Good. But this right here is that turnaround we were talking about right here. This turnaround that we're talking about right there. Okay. So, and there's other ways of finding it, but that really is the best way. And then if you want a confirmation, and I've taught this to you guys many, many times, you take an anchor right here, you put the anchor to the last swing high, and you wait for the price to break above this anchor, which it hasn't done yet. It would be like you would enter like right here. Ideally, actually, I would like to enter right here above this bar right there. But that right there is an A-line pattern for you. Okay. Here, let me see. Let me find one on where was FedEx? I think there was one on FedEx. There was one on FedEx right here. So let me show you one right here. Right there. Oops. Right there. Okay. So, okay, this right here, you going higher, coming down, coming up here, breakout. There's your A line right there. About 7-8 points in there. That is a perfect A line right there. So, why do I like this setup so much? Why is this setup so valuable to me? because it combines so many things that are important to me. It gives me, let me just see if there's any setting up right now. No, no. The market just looks awful right now. But it gives me, the A line gives me several things that I'm looking for. For the first, it gives me a nice smooth trend. Oh, I forgot one other thing. You see this, the slope of the trend? The slope, I want it to be over 20 ADX. So let me show you that right now. Show you that. See, I'm giving you guys a real hands-on lesson here.
Oh, absolutely, Roger.
Here, let's go to ADX. You can find all these, you don't have to pay for these indicators. These indicators were created ages ago. Now, my ADX is a 10 days. The standard setting is 14 days. So, okay, so you see, and I don't really care which way it's moving. I just want it to be over 20. I don't really care if it's going down or if it's moving up. This thing is direction blind. So, see right here, a trend starts right here. Look at ADX. Starts moving, moving, moving. It gets above 20 right here on the 5th. Right here. So as soon as we get this, a trend starts and then we move. So you want an ADX above 20 and you don't want it above 40. 40 usually peaks out. A trend usually sizzles out at 40, 50. So anywhere between 20 and 40. And again, I don't care if it's moving down or if it's moving up. I care about the number that it's at. Okay. So think about this for now. You have to have a nice clean stock, right? You should have a clean stock regardless of what strategy you trade. You should have a good liquidity because we're going to look at options in a minute. You learned about pullbacks low. And oh, by the way, I'm going to teach you guys something. Write this down. This is a good little thing to write down. The best pullbacks are very, very shallow pullbacks. So the reason RSI, you see this indicator, the RSI, this indicator, it stands for really stupid indicator. That's what it stands for, really stupid indicator. And the reason it stands for really stupid indicator, I'll show you why it stands for that. Here. So these are the standard settings. Let me start from scratch. I want to show you how stupid this thing is. It was never made for stocks, so in all defense. Okay, so let me show you. 14. Okay. Just look at the at this line, okay? Okay. Hold on. It's not right. Something's not right with this oscillator. Yeah, there we go. Okay. That's it. So you see how it goes to these levels right here? And it's not set up right. Something's not right with this thing. Something is not right with this RSI. My point is this.
It's stupid, Roger.
Yeah, there you go. My point. Well, here's what I wanted to. Here's my point. See right here, it takes a move like this for this thing to signal overextended levels. Mm-hmm. You really have to you get a signal out of a regular RSI. Here, let me go back 2 years, okay? In order for the RSI to to oversold territory, so here to show you how stupid it is. Okay, finally I got it to work. So this is the RSI going back 2 years, okay? 2 years. 2 years. In those 2 years, it got red. It went below 20 2 times. here, and here. So I'm going to ask you guys a question. Do you think by the time the market goes from here to here, do you think we would have already realized that the market's getting a little overextended to the downside? This is when you got your signal, like right here. Right here. That's why I call it the really stupid indicator, because it would have told you right here to go long, and it would have told you right here to go long. Not a time to go long. What's the point? And look, and this is overextended to the upside. Look, it goes here, and what happens? It keeps going up. So this indicator is the dumbest indicator you could. Look, it's overextended right here. Comes down and it comes right back up. It basically tells you after the fact when something has happened.
Yeah, it's lagging big time.
Tremendously, tremendously lagging. Like the biggest lag you can find. Okay. So really bad. But when you move it to 2 days, and I haven't really explained to you what I'm trying to, and I will in a second, but hold on. Here. Now, move it to 2 days, 2 periods. So what happens is this. Imagine you're in a fight, okay? And imagine somebody cuts your head off. What are your odds of waking up and coming back to it and bouncing back up? 0, right? Or getting hit by a car. You're dead. That's what the RSI does. By the time the traditional RSI tells you that that you're overextended to the downside, you're in a market crash. Okay? So it's not very effective. It's extremely slow. But what if you're in a fight and somebody cuts you with a paper cut? You're like, paper cut? I can come out. Or just punches you really bad in the face with a one of those gloves, those the protection gloves. You'll be like, oh, I can recover after this. You may be a little phased for a few minutes, but you'll be okay. Well, believe it or not, but the stock market works exactly the same way. Exactly the same way. And I mean exactly the same way. Okay? So when the stock market experiences something like this, it's much harder to bounce from it than it is to bounce from something like this. Mm-hmm. And you won't read that in a book. And it took me many years of data analysis to figure that out. That's why the quantum indicator works so well, because it finds those baby moves, just like the 2-day RSI does. Finds these little quick moves. All right. You don't need to go down here for this thing to trigger. See, it'll trigger every time you have a down move. And I'm not suggesting you start using this. What I'm trying to tell you is that don't rely on these traditional 14-day RSI or stochastic oscillators. I think I might have mentioned a story to you that a stochastic oscillator here, instead of me mentioning it, let me just show you.
These are indicators that were, as you've spoken oftentimes, Roger, they were created to trade the commodity markets.
That's right. They were never created for the stock market.
For the stock markets. Yeah.
But somehow, so we all know what a stochastics is, right? Whenever you guys get a chance, check out Jake Bernstein's stochastic pop. What he did was he basically took the stochastic and he reversed it. So when it gets overextended to the upside, he buys, not sells. And when it gets overextended to the downside, he sells instead of buys. And you can get it for free. I'm not trying to sell you anything. I'm just explaining to you that it's a classic indicator. So it's RSI, stochastics, these are not indicators that work really well with stocks. They work well with commodities. So to summarize, before we move on to the next segment, in order to trade the A line, why do I like the A line? Because the A line reinforces the most important principles that will make you a successful trader. Finding a clean stock, finding an ADX above 20, finding a down move that's not overextended, right? You don't want those. finding good liquidity, and finally getting a confirmation. Remember I showed you how to confirm using the VWAP?
Mm-hmm.
So for example, that's your peak high, right? And you want to know when to buy here, okay? See, right there would be your entry. Right there would be your entry. Right here would be your entry. And after that, no entry till you get up to here. And my suggestion is wait for the full bar to be outside, and then you have a nice move, which is exactly what happened with Google. Point is, all of these things, good clean trend, good stock, good volatility, not overextended, coming back to the base, not too much overextended to the downside, and ready to come back up via confirmation. All the principles that you need to trade successfully. Now, after you do all of that, okay, then we start talking about options.
Quickly before we get there, Roger, there was one question that came up. In that process, at what point in time do you take into consideration earnings when looking at a clean stock? Do you stay away from them? Do you allow some grace? What's the role that an earnings date plays in this process?
It depends how long. Typically, I give myself 2 weeks. So I don't want earnings within 2 weeks of when I'm doing the trade.
On either side of earnings, 2 weeks before,
no,
2 weeks after?
No. After, I'll go as soon as the next day, or preferably the second day after earnings.
Okay.
No, I don't wait that long after earnings. I'm talking about before earnings. After earnings, the party's over. I just don't want that implied volatility. So I'll wait a couple of days.
Okay.
That's not a big deal. I may even not even wait a couple of days, but I don't care about after earnings. That's not really a criteria.
If you're sizing things up, you'd like to make sure that you're at least a couple of weeks away from earnings.
Yeah, I want to be 2 weeks.
Okay.
I want to be 2 weeks away from earnings.
Okay.
2 weeks away from earnings. That's the golden standard. 2 weeks away from earnings. Okay. And remember, that's a swing trade. And then it's a piece of cake. Then the rest is, remember what I tell you, the option is just the conclusion. It's just how we're going to get from point A to point B. It doesn't take any analysis. Delta, 0.70, 4 to 6 weeks, 4 to 5 weeks to go. Time frame, 4 to 6 weeks, 0.70 delta. That's it. If you want
to do it to be more complicated, Roger.
But you see how I've talked about the quality of a stock,
the
slope of the stock, how much it pulls back, and making sure we have a confirmation on the way up. And then finally, after all of that, we talk about selecting the options. A lot of things had to happen before we selected the options. Everybody just wants to go and buy the option. They don't want to do any of this other work. Okay. So that is the program that I would recommend to my best friends and to anybody who's starting out in trading. And I think that would be my first principle. That would be like, hey, you're just starting out. You want to get your feet wet. This is what we need to pay attention to. And now I'm going to teach you and show you a presentation that talks about the A-line from a different perspective. And I think you guys are going to really enjoy it. So if you want to stay tuned and watch this, please join us. Now, I'm going to give you some stocks.
Quickly, Roger, for those that are on YouTube, I just need to remind them that we're about to close the YouTube channel because we're not allowed to do promotions on YouTube. So if you would like to come over and hear the rest of this presentation, please join us in the Zoom room. For those of you that are here already, you're in the chat panel, don't do anything. You're fine where you are, but we're going to stop the feed to YouTube and invite you all to come join us here in our Zoom room. There you go, Raj. It's all yours.
Thanks.
Bud.
And by the way, somebody was asking me about short side.